Alright, today we're going to talk about Chapter 3, Double Entry Framework. If you want to follow along in your textbook, it's page 50 is when the chapter begins. Our first objective that we're going to cover is defining the parts of a T account. Now, what is the T account? Well, T account is basically a ledger account. We talked a little bit about accounts last time in the last chapter, but what we have is three pieces make up a T account. You have an account name, you have a left side and a right side. The words they use for left and right are debit and credit. So if you're used to seeing debit cards and credit cards and buying on credit and things like that. So we have our debit means left and credit means right. Just like the equation in chapter 2 that we were talking about, the accounting equation, we had a left side and a right side. It's very similar. It works very similar to that. The abbreviations you might see on an account, you would see on the left side DR, which is short for debit, and CR, which is an abbreviation for credit. The third piece of the T account is the account that it's representing, the account name. In this case, we talked about assets and liabilities. One of the assets we talked about in chapter 2 was cash. Well, cash has a debit side and a credit side like every other account. Now, some things that we want to make known about this is a lot of people think debit or credit increase or decrease. You need to stop thinking like that. All it means is left and right. So depending on what type of account it is whether or not it will increase or decrease. So a debit for one account may be an increase, and a debit for another account may be a decrease. And we'll get to that in just a minute. But different accounts are going to the rules for different accounts are different. If you look on page 53 in your textbook, let's go through here just a minute. Okay, we'll come back to that one. Footing and balancing a T account, right? So you would a footing simply means that you sum up a column of numbers and you put the total at the bottom. In this case, on finding a balancing a T account, you would foot or total the left hand side, the debit side. You would foot or total the right hand side, which is the credit side, and you would take the difference. Whichever side is greater is where the balance goes. Because they're on opposite sides, there will be a subtraction. The debit side has 370 more than the credit side has, and so the balance would be a $370 debit balance in the account. Okay, so cash. Here's everything that happened to cash in this period. You had 2,500 debit, 570 debit, 430 debit, 1,200 credit, 300 credit. All of these transactions were affecting cash. We footed it, and it was 3,130 for credits and 3,500 for debits. And our balance would be on the debit side with a 370. All right, our specific types of accounts that we're going to have with debits and credits. Asset accounts. If this starts on page 53, as I was talking earlier. Asset accounts are where? On the accounting equation. They're on the left-hand side, right? So if you guys remember that little formula that I gave you, I'll give you a little. So one way I like to remember this is to go back to the accounting equation. and then I break it down to my different accounts, and I'll put the letters in here. A is for assets. Do you guys remember the extended formula I gave you last time? Assets plus, well, let's just break it down quicker than that. Assets is equal to liabilities plus revenue minus expenses plus capital minus drawing. Okay, now what's the problem with this? In order to know an account's balance, we have to know which side it's positive on. So I want everything that's negative to be moved to where it would be positive. Okay, so when I do that, I restate it here. Expenses were negative on the left, so I'm going to bring them over and they're on the right. And so the same is true of drawing. Okay, and so we end up, well, sorry, it's a little harder to type and talk at the same time. You end up with assets, expenses, and drawing on the left hand side, liabilities, revenue, and capital on the right hand side. Well, guess what that means? That means that the normal balances, when they're positive, for the ones on the left, these three right here, are debit balances. For the three on the right, they're normally credit balances. So the opposite, whatever happens to them, a debit for for an account on this side would be an increase. A debit for an account on this side would be a decrease. So that's why we can't define a debit or credit as simply an increase or a decrease. Okay, so asset accounts. If we look at our little thing here, asset accounts are on the left side of the equation, so the normal balance is going to be on the debit side. And that's a positive A, right? What happens if I take the A to the other side? It becomes negative. So it would be minus A. So a credit entry would be a negative. Notice on the left it's what? Positive. If I moved it over to the right hand side of the equation, what would happen? It would be negative. So decreases for an asset account like cash are credits and increases are debits. Okay, transactions, I told you in the last chapter that they had to have two parts, at least two parts. And so the same holds true here. Every transaction has to have two pieces at a minimum, a debit and a credit. It can have more than two pieces, but it has to have a minimum of a debit and credit. And the debits must always equal the credits. So I could have one debit entry and four credit entries in one transaction. But those four credit entries are going to add up to the amount that was in the debit item. Okay, let's look back at our note page here. Liabilities, where are they at? They're over here on the right, right? They're positive on the right. So what happens if I take liabilities to the left of the equal sign? It would become a negative. So it means liabilities decrease on the left, and because they're on the right, they increase on the right. Okay, so notice how the signs are reversed in this case. Because liability accounts are on a different side of the equation, credit will increase a liability and a debit will decrease a liability. Capital account, if we look to our quick notes here, what did I end up with right here? Let me increase the size here if I can. Okay, so I ended up with liabilities, revenue, and capital. So the same thing that happens for liabilities is going to happen to capital. is going to happen for revenue as far as how we treat an increase and a decrease. Okay, so the capital account is just like the liability. They decrease on the left and they increase on the right. They decrease on the debit side, they increase on the credit side. The drawing account, let's look over here at the original. And let me increase the size again. So drawing was originally over here as part of owner's equity, but it was a minus item. So what did we have to do? We had to take it to the other side and get a positive. So drawing, since it was negative over here, would have acted the reverse of capital, revenue, and liabilities. It would be, so when we take it over to the left hand side, it's kind of easier to see. It's positive over there, so what's going to be the increase side of drawing? It's going to be a debit will increase drawing, or a left side entry will increase drawing. A right side entry will be, what happens if I take it to the right? It would be a decrease. So the decrease is on the credit side or right side, and increase is on the debit side or the left side. Okay, revenue accounts. And the best thing I can tell you on these is just to remember, there are a few that you're going to have to remember. This one works the best for me. When I write down all the different types of accounts and what side they're positive on in the equation, I know automatically where they should, left or right, left or right, left. These are positive on the left, so the plus is going to go on the right hand side. They're positive on the right, and they're negative on the left, so the plus is going to go on the right hand side. The negative is going to go on the left hand side. These are the exact opposite. Plus on the left hand side, minus on the right hand side. That may not, memorization may be quicker for some people to remember that, but I like to always bring it back to that equation. And if you write down that equation and you have it as a reference, every time you go through accounting, as you go through each transaction, you will start to learn where it's going to be. Another rule of thumb is always look at the cash account. Cash affects a lot of different transactions. So if we know what happens to cash, then we know if debits have to equal credits and only two things got affected, we know that cash was a debit, then we know the other item that was affected had to be a credit. All right. So revenue accounts, the same as liability and capital accounts, increase on the credit side, decrease on the debit side. Expense accounts, remember, same way as drawing, they're negative on the right. I had to take it over to the left.